Hello, everyone. Welcome to the final live session and demo day for Botcamp Cohort 12. This was a great cohort. I was really impressed with all of these strategy submissions that we got over the weekend. We had a total of 9 submissions. So Fade and I have reviewed them, and I'm pleased to announce that everyone who submitted strategy has been certified for this cohort. Today, we're going to go through the presentation and watch all 9 of the strategy presentations that the students work so hard on. And we'll have a chance to try to answer questions as well, ask and answer questions from the folks out there. So let me share my screen. We'll get started in probably about 2 or 3 minutes. So I want to make sure everyone has time to join. And yeah, it's been amazing, actually. I'm really looking forward to showing you guys what your cohort mates have built. I looked through all the design templates over the weekend and yesterday. And yeah, I was super impressed with just the level of detail that you guys put into writing the strategies, designing it in the template, and then also presenting it in a video. I know it's a lot of work in a very short amount of time. And the fact that 9 of you guys did it is truly gratifying to me. All right, let's get started. I think we have most people from the cohort on. So we'll get started. And as with other live sessions, this will be recorded and made available in the courses. One note is that this one will also be made public and made on YouTube, because this is the demo day playlist, and we'll have individual videos for each of your strategies. All right, so first, let me start with a bit of a recap, just to summarize what we did over the last few weeks, and also describe and make sure you guys are clear about the certification process. Next, we'll just dive straight into the demos. Because we have 9, actually, I'm going to play each one. I think each video is about 5 to 10 minutes long. So I think we'll have time for all of them over the next couple of hours, as well as maybe like a small Q&A after each strategy. And then at the very end, we'll do MVP voting. This is a fun thing we do every cohort, where we have all of you select the best strategy in a cohort, which gets a special MVP NFT. All right, let's get started. First, with the recap and certification. So I think that I wanted to thank you all for being on this journey with us, because Hummingbot over the last 6 years has really evolved from something that was very simple, command line based market making bot that was like single purpose, and it was one GitHub repo. And today it's a collection of GitHub repositories that help you with various aspects of algo trading. So I think Fede presented this diagram in one of his last live sessions. And I think this is a good description of what you can build with Hummingbot today, where you have the API on a trading server that's like your production server. It's like you basically use the API to launch and deploy multiple bots. But you also have like a research server running QuantLab, where you can fetch data and just test out various ideas. And then I think you can also have on your own machine like communication hub that talks to both of these, where you can use MCP or dashboard to control these various aspects of your trading process. So because of that, I think that now I can truly say that Hummingbot is more of an open source framework. And that's why what we've been teaching at Botcamp has expanded over the past 1 or 2 years. So now you're capable of doing more. And I was really pleased to see the folks in this cohort taking advantage of QuantLab in particular. And so now we've done 12 cohorts of Botcamp. We've had 300 people go through it. And now we've had over 100 kind of certified students who have officially completed and created their own strategy using Hummingbot. And I think like over the last few weeks, you guys have done a lot. So we started in almost a little more than 3 weeks ago. We did 12 sessions over these 4 weeks. And so today, demo day, I think is a culmination of all of that. So you have these live sessions, you'll always have lifetime access to these. So even if you did not submit a certified strategy, you can still watch these live sessions, hopefully learn the material and complete the certification process. Yeah, so before we move further, I want to congratulate the 9 students who submitted their strategies. We reviewed them, and please announce that everyone is certified. And before we move on, I just want to thank and congratulate all the folks who got certified in this cohort: Alexia, Christian, James, Joris, Lou, Max, Pasha, Todd, and Tree. So yeah, congratulations. And we're going to dive into your strategies in a little bit. Yeah. Okay. So now for those of you, I know that some of you who have not submitted a strategy, you can still do that. I'll explain that in a bit. But basically what we'll do today is we're going to vote for the best strategy we'll see all the strategies and we'll vote for the best one. So after today, we'll basically create these two NFTs. One NFT will be an ERC 1155 NFT. So it's basically like we can create a limited edition. So everyone who presented today, all 9 of you, will get something, but it looks like this is one that we gave out for cohort 11. And after voting, there'll be one more special NFT for the strategy winner, the best strategy of the cohort. And yeah, so Nikos won last cohort with his leader follower directional diversion strategy. So yeah, that's what we'll do today. And then I also want to make sure that those of you who aren't certified understand the process to get certified with the strategy so far afterwards. New for this cohort is we're going to have a member profile, which I'll show you in a little bit. So if you're certified, your profile will look a lot better because it'll say certified and it'll have your strategy video there. We will also add you to this certification list on the official Hummingbot website that lists the cohort and your name. We will give you a special Discord and LinkedIn badges that you can use on your social media. And there's also a new private Botcamp certified private channel. This is where sometimes we get job postings from different folks and we can post them there. And I think it's also like a more exclusive forum for the folks who have gotten certified. So if you're not certified, you can still get certified at any point by submitting your strategy. So in the past, we had you just basically fill out the strategy templates. Going forward, we're actually going to have a form for this, where you can have a form that you can update your member profile on the website, as well as update your strategy if you want to get certified later on. Just like currently, we do review it to make sure that basically it's just like today, you'll submit the description, the video, and the code. So we will actually review the strategy, but I think it does give you a pathway for anyone who is not yet certified to be certified. I do think that this new members profile page that we're building will help a lot with that, because basically, yeah, after this cohort, so we're building this right now. So I think it should be done by next week. And we'll have essentially a profile for each person who has gone through a Botcamp cohort. And if you are certified, like Jonathan in the last cohort, it'll have your demo day strategy down. And I think hopefully this will be like a good resume for this. So Diab asks, I have not submitted my strategy yet. How late can I submit my strategy so I can still get the certification? So because it's new, we're going to allow certification for anyone who has taken cohort. So there's no kind of like time limit, but the sooner that you submit your strategy, the sooner we can review it and add this profile section to add a strategy to your profile. We will create a profile for every cohort member, regardless if you've created a strategy or not. But I think you want to have a strategy because by default, the filters and it's designed to show the certified folks only. And I think overall having a strategy will do a lot to enhance your kind of like your Hummingbot resume, so to speak, your market making resume to a potential employer or someone else. And so the process for this is that we'll essentially have a form that allows you to update any information on here. And then once you send it to form, number one, we'll validate that it comes from your Botcamp registered email address to make sure that it's actually correct. And then we'll update the information on both your profile as well as the strategy if you're submitting a strategy. So that way, we'll have one single form that you can use to either update your profile with your about section or your social media information. And you can also update your strategy if you want to get certified. Okay. Yeah, Lou says, can I not publish my video publicly on YouTube? I'm also working a full-time job. Yes, you will be able to basically tell us not to add your strategy to, but basically you can have a private video essentially as well. And then we basically won't show you the strategy publicly. However, please note that because we make the demo day video public, yeah, there will be a public version of your video out there because it will be included in the public demo day video. However, you can tell us not to make this. You can either not show the video or not show the code of your strategy if you want. So that'll be like an item in the form. I also want to mention, so some of you I think may want to get certified privately. For example, if you, basically you can certify privately if you basically want to go through the process and don't want to show the video of the code. I think some of you in this cohort, I think, wanted to get certified privately. So if you want to do that and not submit even like a Notion page or anything else, like that's fine too. And you can basically use that form to submit your strategy. And then I think what was like a selection for making it private, and then we'll do that. So here are the 9 demos that we're going to go through. So first one, let's start with Alexia's strategy. This one is called VWAD Enhanced Bollinger.
I'm going to share this enhanced Bollinger strategy, what I call it VWAD Directional. Why I build this? I know Bollinger is quite popular and quite helpful for trading. So I just want to introduce the volume dynamics so we can help to catch the real market opportunity and improve spread adjustment real time, and also as well the position adjustment. And also I will go into do some exercises test after enough data was collected from my trading bots. So the assumption is built on that such kind of enhanced strategy can reduce the adverse selection during extreme market period and lower the information asymmetry and improve inventory management and enhance profitability. Well, whether or not this is a better strategy, it's need to be proved after these bots run for some period and some data was collected. That's why I also built a Python notebook, but without those data, I still need time to figure out how to run those database together with Python. And so I can finish its enhanced lab. I hope so. So let's first start before we go to the detail level. I'd like to talk a bit about the principle and the logic about this enhanced Bollinger strategy. So first, like I mentioned, since I like Bollinger, I think it's quite reliable, but I like to add a volume metric to it because with this small layer, it's possible to catch real market opportunity and reduce market noise. So as normal, we initialize parameters and the parameters need to be keep optimized during the trading process. And then we will fetch market data and calculate the VWAP and the volume metrics. So if there's spike detected, we are going to tighten the spreads in this strategy. Otherwise, we'll keep it as standard calculation. And then the VMO was calculated so to detect if there's the signal for trading or not. So if there is, we are going to also check the inventory management and if it's within the risk module, the threshold there or not. If it is, then we are going to put order. If it's not, the position size is going to be reduced. And then we will monitor if the order is filled or not. If it is, okay, inventory and the P&L and the log performance metrics are going to be updated. All this is going to be showed in the later screen share, but if not, we are going to keep monitor it. Then there will become the timer refresher and to keep running these trading bots. And then now I'm going to check this. As we can see, it's running well, and I'm going to check the status. When we run the status check, we can find the return information is composed of 2 parts. The first part is the strategy, the performance metrics, and the second part is the market data. So we can say it's include the status of your strategy and the trade count, the win rate, the starting balance, return, and the current balance. Since this strategy was just built today, so I still didn't get any market opportunity to trade yet. It's just keep calculated and collect data. Look like most of signal is neutral, and it could be just 1 or 2 chance of trade within a day. The way I build this is first I build the signal connection part, and when that one runs, and I just add those trade function to the previously upon file, and so make it can go through the Hummingbot CLI, and I will keep working from there. Coming back to this strategy detail level, so For the input and the parameter side, beside those Bollinger base configuration, we also add VWAP configuration to calculate the VWAP, and also the volume analysis, VMO, as well as risk management. Like the risk management, we set stop loss and take profit ratio, and the leverage is we just do spot trading here, no leverage. And also there's like marks position, total risk, and etc. And the important events going to be monitored is like the signal events, either it's long or short, like the risk events, if there's enough balance or not, and the position size limit for each trade. On the total exposure is also defined here to be monitored, and the minimum trade size event and the market events, if there's sufficient data or not, and if the signal is strong, weak, and also the volume normalization event. The last one, the performance event, just check if the order is filled or not, and the performance metrics keep updated and be monitored real time to make appropriate adjustment remotely. So that's all for my presentation of this strategy. I'm quite new here and don't have a lot of experience in building, coding, but I do have a lot of interest, and I'm from the traditional financial market. So I hope this was the first step and the first block I built in this world, so I can keep building from there and keep contact and communication in Hummingbot community. And it's really a great learning experience for this Cohort 12 for me. Thank you, everyone, and happy to answer any question here.
Great. Thank you very much, Alexia. That was a really good presentation. I really liked how you went through all the detail of modifying the strategy, as well as adding the events that would be important and actually running it to what you're looking for. So as I mentioned, great use of the format status to understand your strategy in real time. I also liked how you identified presence of what might be like strong signals or weak signals. I do think that, like having a single threshold for signals may not be optimal. And I think detecting when the signal is weak and it is actually really like an important kind of modification you made to the direction strategy. I want to I think Alexia's on the call. Does anyone have questions for Alexia about her strategy?
I only have one that is like, I probably has to be the code reviewed, right? But I just saw that when you study the strategy, you have everything USD. So the strategy assumes that it can only go long because you are trading on spot. So if that's the case, the only way that you can start trading is from the long side, or like from the buy side, in case that there is a deviation from the market going up, and your strategy will tell you to sell, you will not be able to do it because you don't have assets initially. That's the only thing that I can observe from the behavior right now. But I don't know if that is intended.
Okay, it's part maybe on purpose, but actually I still need more work on it.
Okay.
Yeah.
No, yeah. But that's the only thing that I can observe
Yeah,
to tell you is like,
observation.
yeah, the only trades can be executed from the buy side because if you receive a short signal, you are not going to have balance initially.
Yes,
So,
exactly. Thank you.
Okay, thank you.
More help from you in the future.
Yeah, Alexia, I think there's also another question from Max who asks, have you done some backtesting? Do you try backtesting this strategy at all?
Not yet.
Okay, right. I do think it's a good candidate for backtesting, actually. I think that I would probably start with QuantLab if you're already, since you have a data science background, but I think that the QuantLab and the backtesting for Bollinger should actually work pretty well.
Yeah, I try to, do next step.
Yeah, let's go ahead and look at the next strategy, which is from Christian. So I think Christian has really modified the strategy and incorporated open interest into his strategy. So let's take a look.
Hi guys, I'm Christian, and this is my submission for the Botcamp Cohort 12. So my strategy is called Following Spot Orderbook Skew and Fading Open Interest RSI. And it's around the idea that spot traders have the heavier hand in the crypto market, and aggressive perpetual traders often call tops, bottoms, or at least some mean reversion. The data I want to look at is, for one, the spot order book delta. So the resting liquidity delta, meaning the difference between the bid and the ask side, for a depth of 1 to 5% around the mid price. And for the activity of the perpetual traders, we can look at the open interest, usually only for the USD margin contracts because it's a bit cleaner. And instead of looking at it in absolute terms, we can measure relative changes with RSI values. So on the right side, you can see a screenshot of the platform I use, Trader.io. Here you can see the RSI value for the spot order book delta. On the lower side is the RSI value for the open interest. And you can often see that when these both RSIs are at opposing extreme levels, so the order book is heavily skewed to the bid side and the open interest is relatively low, that price tends to go up. Or on the opposite, when the spot order book is skewed to the ask side, to the sell side, and we have a relatively high open interest, that price tends to go down. So the strategy is really to identify these extreme levels when they are at the opposing side and then take a position in the market. The I built for this strategy is very simple. I fetch data from the market data provider about the order book, and I fetch data about the open interest from the Binance REST API. I then calculate the RSI values for both of them. I check if I have any active positions. If not, and the RSI values are at opposing extremes defined by a certain threshold, then I basically start into a position with a specific interval that I can define beforehand. And if I have the active position now, I check basically if the RSI values are neutralized. So that means if they reverted back to the 50 level. If not, I monitor for a stop loss. So just a maximum loss I want to take. If that hits, I close the position. And if these RSI values are neutralized back to the 50 level, I take profit. So let's run the strategy. I have here a configuration file for the controller I built for my strategy. And these are the parameters you have to define. So you have to give it a total amount of position size you want to have. You have to give it the connectors for spot data, for the perpetuals data, and which exchange you want to trade on. Of course, you have to give it the trading pair and a interval, which is important for the RSI calculation. Then the amount quote is the single order size, basically, that you give it when you have the TWAP running. Then you give it a TWAP interval, so the interval you want to execute orders at. You give it a stop loss and a cooldown time. The cooldown time is relevant when a stop loss or take profit was hit, to give the controller time to reset, basically. Then you give it the percentage of the order book, where you want to calculate the delta between the bids and the asks. So here it's 1%. And then you give it the RSI length for both the spot and the open interest, and the upper and lower bound or threshold values, basically. So the oversold and overbought levels, where you identify the extremes. Okay, so let's run the strategy. So it's starting now. And when you type status live, I created this overview for my controller inspired by the DLMM controller, I think. So it shows you data about the spot order book status. So for a book depth of 1%, you see the bid volume, the ask volume, and the delta, and the calculated RSI. And of course, this will take a bit of time to actually be calculated because it's live data and it needs a specific amount of data first. Here you can also see the open interest and the RSI for that one. And on the lower side here, I just created a visualization for the RSI metrics, basically on the top one for the order book delta and on the lower side for the open interest. These dots that you see are the RSI values, and here are the bounds or the thresholds to identify the extremes. And what you're looking for now is basically to take a position when they are basically at the opposing extremes. So after running it for around 20 minutes, now you can see that the RSI values are actually calculated. And here you can now see the open interest actually being at an extreme level to the downside. So there's relatively low open interest, but the order book delta is pretty much in the middle around the 50 level. So no position is taken. And since I'm running this on a Sunday with relatively low trading activity on Bitcoin, at least, actually no position has been taken during the whole day. Of course, there's plenty of more work to do with the controller. First of all, it needs some forward and backwards testing. And for backwards testing, I actually have to record data about the order book and the open interest with QuantLab. Secondly, instead of using a single take profit, I actually want to use a trailing stop in order to ride the price further if it's actually moving favorably in my direction in order to increase profits. And third, I want to actually aggregate data for the spot order book and the open interest from different exchanges. At the moment, I use Binance with a majority of the trading activity, which is fine. But to get a bit more data, you can aggregate other exchanges like Coinbase for the spot order book, or other exchanges like Bybit for the open interest.
Christian, that was amazing. I really enjoyed how clear your presentation was. And I think my favorite part about this was that you started with a hypothesis that actually made sense. You took a real world observation about the effect of spot traders in the market, and you turned that into a very simple hypothesis using open interest and order book. And you use Hummingbot to collect the data, build a strategy, and test it. And I think that what you did, is actually what I recommend to a lot of people that are starting out, because going from something high level to something testable where you can quickly validate, is this worth building on top of more, or should I start with a different hypothesis? So that was like amazing. And I just want to congratulate you for doing all of that in a few weeks. Fede, do you want to add anything on to that?
No, I just commented also that I'm happy that he ended up coding the open interest, because that was probably also something difficult, like how to add a different data source that is not available by default. We covered some of that on the live sessions, like how to add it, but he ended up doing it. So I think that is double merit, I would say. Very good. And the next thing will be putting that like in a constant data collection pipeline. That I think that part will be even easier for you because you started from QuantLab. But very good. I also agree with Mike that putting like a hypothesis about the market and then building everything of your strategy around that makes a lot of sense. And you are trading what you are observing from the market. So I think that is really valuable. So welcome and congratulations, Christian.
Yeah, thanks, guys. And it's actually something that I use like in day-to-day trading. So I usually like trade order flow based, and I usually use it on higher time frames, like the 1 hour or even daily time frame. And that was just an observation I had, that it actually works on lower time frames pretty well. Yeah, but I don't have time to like trade on those lower time frames, so it's actually a good target to try to build an automated strategy out of it.
Nice. Yeah, that's the perfect moment to use a bot when you cannot
Yeah. I think the execution part will be quite tricky. I don't think that it will be profitable now. It was just going TWAPing into the position and just taking profit. That's why I think like the trailing stop will actually help to ride a position actually, like when it's moving into the proper direction. So it definitely needs some testing and then probably some fine tuning.
Yeah, but the thing is that, as always mentioned, is like start like small baby steps or step by step until you are confident. It's like you're not going to go from 0 to 100 of you automating with a lot of capital, but the steps that you are doing is like doing it manually in higher time frames. Start to trying to automate in lower time frames, control it live. That will give you confidence and also more intuition of how to modify that execution. But that is exactly like the path that you need to follow. So yeah, great work, Christian.
Yeah, thanks, guys.
So there is one question from the audience. So Lou asks, what do you mean by heavy hand?
Yeah, that just means that spot traders have the bigger impact on the market. So bigger traders with more capital tend to trade spot markets and with a higher time frame or time horizon for their trades, and that has the bigger impact on the market. And on the contrary, perpetual traders are often like lower time frame, leverage traders, which stand against that. So that means like the heavy hand, like just more impact on the direction of price actually.
Good. Thanks, Christian. All right, let's move on to the third strategy for today. That's it's called PMM for liquidity mining, and it comes from James.
Everyone, this is James, and I've created a project called PMM for liquidity mining plus hedging and region switching, which means my configurations will be switched between adapting to different market conditions. So my primary goal is to act as a market maker, providing liquidity on the SLPL and earning weekly SLP distributions while being hedged. For the hypothesis part, I understand that before conducting any market making on the SLPL, we need to develop a systematic model to understand what we are trading, the underlying rewarding mechanism, and available trading options, so that our strategy will be more solid. And just to give a quick answer here, I have chosen the SLP RUSD. So here are several items that I have gone through so that I came to this decision. For example, like to understand the rules and rewards from the websites. And there are some systematic concepts. For example, is this aligned with my objective? And for the boost versus liquidity trade-off, the market depth, inventory and the cold asset risk, the feed, the ticket flow, quality and first selection, the competition and crowding situations. So here you can see that although especially for the SLP RUSD, right now the market maker there are like 16. It's rather crowded, but after a whole consideration, for example, the inventory and cold asset risk and the market depth, and also the RUSD itself is issued by a qualified custodian with a compliance first design, and the SLP has also operated since 2012. It seems reliable, and that's why, and of course, the rewards, and that's why I've chosen it. Due to time limits, feel free to have gone to detail for the decision making. And let's come to the risk management. There are several key risks. For example, the inventory drift and the adverse selections, the volatility spikes, and there may be Q risk and operational risk. So here are some measures that I've taken. For example, using the position rebalancing threshold PCT and setting a reasonable executed refresh time. And I've also introduced the perpetual futures to hedge it for the inventory risk. And for the adverse selections, for example, the stop loss and time limits, and moderated profits, and then the cool down time. And for handling the volatility spikes with a fixed spread strategies, I've predefined two different configurations, the calm versus the volatile, and then it will switch it automatically due to some condition that I've provided, mentioned in the V2 control I've modified it. And for the operational safety, Q position, also the multiple levels and operation safety, so small total amount. I first start with another 5 to 10 RUSD only, and then scale up. And I try to make it like roughly 50-50 initially. And then I've also created a note in the quick notes to allow smoother and stable connections. And thanks Mike for giving these suggestions. And for backtesting, I've actually gone for different stages. So the first stage is I'm trying to, of course, create two different configurations, and also trying to get data from Binance. It's all being done using the Quant to do the backtesting. So first of all, I just try to test it randomly. And then here is the first time configurations. You can see that it's not that ideal because it's not that much get feels. So I'm trying to releasing that slightly wider than the spreads, and then it came to the second adjustment backtesting. Most likely it's much better. However, I've also done a third backtesting, which is trying to do the regime switching, like introducing the switching automatically. It shows much more feels more reasonable profit and loss, and that's why I'm trying to adopt it. And just a little bit more supplements you can always like to jump into to look into, like how to, I've tried to make the backtesting more realistic. And also I'm trying to backtest using the SRP-USDT because it's nearly identical to SRP-RUSD. And for strategy design, just this SRP-RUSD pairs and the PM simple configurations. And here I'm going to have two different sides. The first side would be the spots, which is the control and regimes. First of all, on tech, and then we'll test some recent controls, configurations, and then comes to the regime engine. There will be candles for SRP-USD for 1 minute, and it computes the volatility, realized volatility and EMA. And then it will show, is this the desired regime, or do we have to switch? And then you can see that if yes, then we switch it, and then if no, it directly come to the order pipeline. Is it time to create a refresh orders, and then we do the PM normal stuff, and then it will keep looping and to get the orders. And for the, I've done this on the Hyperliquid. And first of all, I will start with to see the swap exposures and wanted to have like nearly zero net exposures. And I will also choose the hedge ratios, one for neutral, 0.8 to 0.9 for like the hedge, and do computer size. And then try to assess the limit orders. And then I will also make sure to get the margins with extra buffer, right? And then we'll keep to verify the net delta, and then to constantly review the funding costs and trying to trim the hedging and also monitoring the price. For some detailed explanations, you can also refer to this document. And here's slides that I'm trying to do it on the Hyperliquid. And for deployments, deploy strategy for clients at first running on the local computer. Let me have a quick snapshot for you. It's like this. You can see it's running perfectly, like showing that it's actually doing executing the orders. You can see that, and the profit and loss, and it's measuring quite well. Yeah, thanks to the testing. And then I deploy it to the AWS EC2 instance, and we can try it. I recommend you can try it because you can have for no cost for up to 6 months. And here are the screenshots and the orders you can show in the SRPL website. And nearly 50-50 for the starting inventory. And for the performance analysis, because I only started, at the days of this videos releases, then it will be around only like 2 to 3 days. And right now it's like 29. It's not that bad and not that good. It's just normal. It's a good start. The hypothesis is working. And so far it remains nearly zero, but it might change a little bit, right? Because it's keep running. And the volume trades continue to increase successfully. And the person has also hedged my inventory risk. The regime switching also works. There are several things I think are further to do to improve the strategy using the PM to do the liquidity mining. One is to expand the market coverage, because on the SRPL platform, there are so many pairs, and I'm trying to consider extending it to the cross-exchange market making for the more better hedging and risk reductions. And for this time, I keep the perpetual hedging menu for now to minimize the infrastructure load due to the time and resource constraints. But in the future, I'll try to analyze the correlation across the different spots pairs, and then I'm trying to construct a hedging basket using selected perpetuals to offset the aggregated exposures, and of course setting the threshold. There are much time left, but I'll quickly go through the code. So first of all, no further changes in the PM simple, and then for the climb and volatile YAML configurations, it's basically all the results. These numbers are all the results of the backtestings after different trials. And then here you can see, you can check it out later in the code. And I will mainly focus on the V2 controller with regime switching, because I'm trying to modify it based on the V2 controller template. And first of all, we will calculate the regime switching numbers. You can check it out here. And then to simply explain it, because there will be two signals. One is the realized volatility. It's the rolling standard deviation of the log returns. High RV suggests volatile, and low RV suggests climb. And also the trend strength. Absolute distance between the fast and slow EMAs is a fraction of the price. So strong divergence suggests the trending of volatile conditions. So basically, there will be only one controller, depends on which regime, and it's switching before it. So the switching regime is here, newly added. You guys can have a look. And so the switching logic, to put it simple, you can have a look here. Enter the volatile configurations when RV or trend causes higher enter thresholds, and return to climb only when both fall below the lower exit thresholds. This avoids rapid the flip-flops at the boundary and also solve the volatility spikes issues. And in the end, I will also show a quick glimpse of the backtesting notebook. Yes, you can see it's like the concept, and then trying to first get the data, candle data from the Binance, and then trying to do different trials, back testing, and feel free to also check it out to see like the graphs and the results, and feel free to check if it can give you any inspirations. That's it today for my presentations. Thank you so much for listening, and I have really enjoyed the Botcamp because we finally have the opportunities to do something hands-on. Thank you, everyone. That's it. Bye-bye.
Great job, James. Yeah, that was a really good presentation. I really like that one. I think that was a good example of how a lot of the work is really going into kind of doing the research, trying to figure out how to hedge the trading pair that you're market making on. And like the actual, you don't need to revise the code a lot to accomplish what you need to accomplish. I also really liked how James incorporated regime change into his strategy. This is actually something that professional market makers use quite a lot. There's actually an interview I did with a market maker named Harry Gay, where he talks about how he was using Hummingbot. And he had two different configs for fast and slow markets, and he was like manually switching between them. And so I think what James did was essentially automating that regime switching behavior into the strategy. I think I would say that there's a lot you can do with that, I think, over time, whether it's kind of using the market that you're on. You can also use like the Bitcoin market as a leading indicator of some type of impending regime change. But overall, I think incorporating regime change into your strategies that's like a professional level technique that James incorporated.
Yeah, and also I would add that I'm very happy that you were able to deploy it. First of all, get a quick node. It's like you pick the difficult path, like trading on a blockchain. So you get a node, you use AWS to deploy your bots, then live. You start participating on a liquidity program to earn rewards. So I think that part is also really valuable besides the research that you did in your strategy. So congratulations also on that, James.
All right. If there's no questions for James, let's move on and check out Joris' strategy. Joris actually did something really cool. I think he actually built a Camino connector to enable his strategy. Let's take a look.
Hey, I'm Joris, part of Cohort 12. I've been working on a systematic monitoring for leveraged JLP positions on Camino. Basically, I had this problem where I couldn't constantly watch my leverage position, but I also couldn't sleep well, not knowing what was happening. That's why I'm a big fan of QuantSlab and built my strategy based on it. In terms of the GLP, it currently yields around 29% APY, but it's also a crypto portfolio underneath, so it's important to know that there's 47% of Sol, 8% of ETH, and 13% of Bitcoin. So when I start to leverage this, I really wanted some automated monitoring of my position. And my hypothesis is that the conservative leveraged with proper monitoring can actually be safer and more profitable than going too aggressive without any systematic risk management. So let me show you what I built as my hypothesis. Camino offers a multiply functionality out of the box and the UI to manage the position, but I need a system I could customize and eventually use across different protocols. So I built this 3-level system: calm when the LTV is under 63%, warning between 63 and 77%, and critical about 77%. And I run a task in QuantSlab, which checks every 50 minutes the health of the position and sends me a Discord message when the status is not calm. In terms of the strategy design, all key parameters like the thresholds, the wallet addresses are configurable. And the system shows me everything I need: current LTV, buffer to liquidation, APY, and PNL in a clean Discord format. Let me go to the overreaching architecture overview. So I built on the Hummingbot gateway since it's already handled Solana connection well, and I added Camino connector and put the monitoring logic in QuantSlab. So that's what I got right now. And I basically made everything configurable, as I said, so that I can tweak thresholds easily. Let me show you how the data flows through the system. Really quick. Let me jump into the code. So I'm in QuantSlab, and I added a Camino connector, and you see I have a bunch of different endpoints methods on this connector, which basically then calls different endpoints on the Camino market. So they offer RESTful endpoint already. But the routes I expose are not that many. The most interesting one is, for example, the position half endpoint, which gives me the leverage and the current LTV of my position. So if I go into the Swagger UI, I also see that I have the connector Camino, and then I could hit the position half endpoint, for example. And then you see that I'm currently leveraged with 1.5 and that my current LTV is around 32%. I could also check my P&L, for example, on this position. So the market pub key is basically the link to the market on Camino. And as I said, they also have a UI. I get the same values from them as well. So I back tested that I actually have the right numbers. If I get, for example, execute that one, that my current P&L on measured in US dollars, for example, 9.1 US dollar, which seems to be correct, right? That's in terms of gateway. And then I have in QuantLab a task to basically get all sorts of things. Let me quickly. So let's go to the position half. So whenever this task runs, I, for example, get the position half and the P&L. Then depending on the state, as I said, if it's not a calm state according to the LTV thresholds, then I also want to get an alert. So that's what this method is then doing. Okay, that's the monitoring thread. Let me head over to Discord to see how that interface. I have a Discord bot for this particular QuantLab task, and you see I have basically 3 commands. I can ask proactively about my position status. I can then start the task to run on the 50 minutes frequency, stop the monitoring, and then there's an info endpoint. So if I head over to Discord, I created a channel where I integrated my bot into it. So I can ask, for example, info. Then I see the current configuration in terms of the wallet and market and also the gateway. So you see I'm running gateway locally right now. And I can also ask for my position status. Takes a second. So again, P&L is still at $9.1, leverage around 1.49. And then the buffer is 52% to the liquidation threshold, for example. So the position is green and everything is good. I could also then start my monitoring. So that's what I would do normally. And now it checks on a 50 minutes interval the position. If it's good, then I get no notifications, just stores the state into the MongoDB. Otherwise, I would get notified here and it would show either like a warning or a critical state. That brings me over to the current state. So that's the current phase where I am. It's basically just the monitoring, like a passive managed or actively managed position, because I have to be active as a human. So you see running the task, fetch the data, calculate the position, and then the evaluation is basically just about the alert which I get. But then I have to be manually manage the position. In the future, I want to have at least a semi-automated strategy running where I can then basically just check off, for example, the position rebalancing act. And if this works fine, then I would also go into full automated flow. That's it. Thank you very much.
That was really cool, Joris. I'm really impressed as someone who is the maintainer of Gateway. I'm really impressed that you added a Camino connector and you use like the framework of Gateway to basically the routes and everything. And also that you use the Discord feature of QuantLab to push a notification and naturally create a Discord bot. But yeah, I think that's a great example of kind of like just really pushing the envelope of what the Hummingbot framework can do and like extending it instead of just using what's already there.
Yeah, I would say congratulations, Joris. I think that you use this cohort also to probably build progressively what now you are doing manually, and you are like handing off that to an automation, and it's like pretty amazing. That, yeah, it's like I know for sure that it's going to help you alongside all your liquidity provision over time, because you are just building from the monitoring, then to start automating all that stuff. So congratulations on that too. And yeah, there are also, we discussed a few variations that he can do like later on, like how to hedge and earn the funding rate of the composition of the GLP that he's having. That probably for the future may be interesting. But I think that at the point of understanding what's the risk of your position, if you can lever up or lever down, or you need to lever down, that's like amazing at this point. I encourage you to continue on this path. And also, I'm very happy that you were able to use QuantLab, that was new, and also use and modify the gateway. So it's a lot of good things that you did. So, well, congratulations.
Yeah, and Todd said this Discord integration is really impressive, and Alexia also finds it impressive as well. And one final note, I think that the approach you're taking in terms of having human in the loop right, at the early on is, I think, really important, especially for DEX-based strategies where there's a lot of things that can go wrong. So starting there and then gradually automating bits and pieces of that process is, I think, definitely the way to go if you're trading on DEXs.
Yeah, cool.
All
Thank
right,
you
well-
very much.
Yeah, thanks, Joris. Okay. All right, let's go to Lou's strategy. Lou did a more of like a directional strategy using the divergence signal MACD with the MACD BBD strategy. So let's check it out over here.
Hello everybody, my name is Lu Ng. Today I'm going to walk you through my strategy. So my strategy is a divergence signal in addition to the BACD and BB for a directional strategy. So the purpose of the strategy is to make the BACD BB strategy more robust, because we'll be adding this divergence signal as well. The hypothesis is that divergence will probably add a more robust indicator to whether the direction of the price action. So divergence highlights a discrepancy between the prices and an indicator. Under a normal market condition, a rising price usually coincides with increasing momentum, and a falling price with decreasing momentum. However, if there's a variance between the price and the indicator, a momentum indicator like MACD, this suggests the prevailing trends could be weakening. So divergence is often considered a leading signal, and a trend shift might be coming since changes in momentum usually precede shifts in price. For the purpose of this certification, we are only calculating the MACD divergence, although we could calculate other divergences as well, like RSI. So the script, of course, calculates both the MACD and BB, or rather, this is already there in the candles TA object. But now it will calculate the divergence by looking at the MACD signal and the price. So what are the variables that the user will need to run the script? Yeah, you will have we'll need the price, the MACD, the BB. Okay, price will be there, the MACD, and Bollinger Band, there's a few parameters. And for the divergence, we can set a divergence window of a certain days, where of a certain number of periods that it must occur within the MACD indicator, either dropping or going higher. The format, we can print out the MACD, the BB, and the price. So the logic is that when the price forms higher highs, but the indicator forms lower highs, then this is considered a divergence, and this was a bearish divergence, meaning the trend could reverse. The trend is going up, but the MACD is actually going down, so it could be reversal. And similarly, for a bullish divergence is where the price forms lower lows and the MACD from higher lows. So the price seems to be going down, but the indicator is going up, so it could indicate a reversal. So for the entry, we will go with the same sort of entry for the Bollinger Band, for the long entry, where it goes below the lower Bollinger Band. And the two MACD signals would be, the MACD histogram would be positive, the MACD itself is negative, and in addition to that, there is a bullish divergence, then we go long. For short, when the price goes above the higher threshold, the MACD histogram is less than 0, MACD itself is positive, and we have a bearish divergence, then we go short. Then we'll calculate on tick under that. We won't be using events. Let us go look now at the code. First, we did the research notebook. So the strategy design, yeah, we just run a few of these cells. Candles data, candles plot. technical indicators. Here we calculate the divergence itself. So the MACD divergence, we have a function that calculates it. And yeah, and then we have to plot it out to have a look. So we just go down here. Let's go to the next one with the signal. So we plot it out as this arrow. Green is bullish divergence and red is bearish divergence. And then the signal here is 1, 1, 1 negative. So let us look at it. It's signal 1 with a bullish divergence. So here the signal indicates 1. So this one is making a lower low, the price itself. The MACD is making a higher lows. MACD is negative. It has just turned, MACD histogram has just turned positive. Hence you have a 1 signal to go long. So that's about something like that. And yeah, and then there's various things, yeah. Okay, then let's go to the back testing. So this is on the WD-USDT coin. Run the back testing engine, summary. So yeah, we had a net profit and loss. It shows you the profit and loss. And now we go to the code itself. So the code itself is where we update the update process data. So here you got the Bollinger Bands MACD, but we have this additional thing for the calculating the MACD divergence. And one thing that we had to one new parameter for this would be the divergence window. I think here we are using 21. That means there's 21 periods where we look for 21 periods within the MACD making the lower low or higher lows. We look for the price making or lower lows as well. So that's an additional parameter we put in. And yeah, the rest is we have a status. It's about the same. And let's look at running it in Hummingbot. Okay, let's start this. So we have already created a config for that. You can read again. Create controller config. DBB divergence. And we'll just use all the defaults here. And here we use 21 for the rolling window. And here we have already put that in the V2 controller script, so we just started. And it runs it. Yeah, so now it's signal 0. So we got to wait until the divergence occurs, so it prints out the MACD histogram Bollinger Band as well. Yeah, that's it for my strategy. Thank you.
Thanks, Lou. So yeah, I think this is a good example of modifying, adding like a custom configuration, and where he's adding this divergence signal parameter into the strategy loop. So great job adding that. I think adding that the window is important as well, because you want to measure, you don't want to diverge. You don't want to say diverge for some amount of time before you go into strategy. And great job.
Yeah, I would say also like great job using also Quanzal as I put in the chat to visualize the signal. So great work there too. One recommendation that I would do it is that in that notebook, the backtesting is only for 10 days, I think, that we were using. That is mostly to run it fast. So if you want to experiment with the notebook, you can just run it fast and see how it works. What I would recommend you is to try to backtest a longer period and visualize that the backtesting makes sense, that actually for WorldCoin on that moment, the market pumped a lot. So now that's why probably it's not a good point to analyze that one. But besides that, you will need to visualize that how many entries do you have, the length of the entry, if the entry makes sense or not, what was the P&L of each specific entry. So probably that's and how by changing the parameters you have different outcomes. That's probably what I will start like reviewing. But overall, the process of designing a signal in Quantslab and then putting that into production is what I actually teach. So I'm very happy that you were able to do it like end-to-end deployment. So great work there.
All right, thank you. Thanks, Luke. Moving on, let's check out the next strategy, which is called Meteora DLMM microstructure analysis from Max. Okay, there you go.
Hi everyone. In this video, I will present my Meteora, the DLMM microstructure analysis notebook This is something I built leveraging the QuantSlab framework within the Hummingbot product. But before we dive deeper into the notebook structure and what it does, let me please briefly explain what is the goal of this research pipeline. The goal basically of this notebook is threefold. First of all, I want to analyze using public API endpoints. I want to do an exploratory work of the different pools present on the Meteora platform. The second aspect, I built as well a snippet within the notebook where basically traders can simulate the impact of their swap trades on different pools and also assessing what is the slippage they're going to have and what is the best or optimal liquidity pool for their trade. So in reality, this is the second point. The third point, which I think is the core of the snippet, I want to analyze microstructure patterns across different pools and different cryptocurrency pairs to identify liquidity distribution anomalies, concentration risks, and potential for market manipulation signals. This notebook intends to have three key use cases. First of all, it's going to help liquidity provision, giving kind of an optimal window of price or range of prices where market makers can optimize their fee collection, seeking for ranges which are less exploited by other market makers. The second use case of this notebook is to detect anomalies and manipulation risks. So it identifies liquidity distribution anomalies and potential market manipulation signals, enabling a proactive risk management because it can help basically market makers to understand if it's very concentrated or there are risk of manipulation or there is a risk of a rug pull potentially. And the third use case is to test potentially with this framework high frequency strategies. So it provides a framework to quickly test the high frequency trading strategies, offering kind of a simple initial feedback on whether the order placement the algorithm use is easily detectable by statistical algorithms. And if you want to go stealth in the way you trade the markets, a framework can be used for that purpose. But let's jump in and let's dive deeper into our notebook. So the notebook is structured, as said, in different parts. There are different cells and different snippets. So the first part is going to basically give you an overview of the Meteora dynamic liquid market making pools. And the second part we will show, so this is really the setup configuration, where basically you establish, you import your libraries, you load environment variables, and it sets up the scene for further analysis. And when this runs correctly, it's going to tell you what is the network, what is the gateway URL, and basically it loads the Telegram bot token and the chat ID. Because at the end, as we will see, there is going to be a connection to Telegram to really post and send periodically this report that is not produces. The second part is more a Meteora pool discovery. So here we set a threshold in terms of minimum liquidity that the pool should have. And we set up top 10. So we analyze basically 10 of the largest pools, but this can be configured by the notebook user to feed their needs. And here the output of this is going to be more general statistics about the protocol. So it's going to give you kind of the total TVL for top pools, total volume for the last 24 hours, fees, average API, the number of active pools, and also the capital efficiency with regards to the daily turnover on part. Then, using as well more public API endpoints, we analyze more pool groups by building a bin step strategy guide. And the output of this is going to be basically comparing different bin layout and setup for different tokens. So it helps basically guide through what are the different pools available for the top tokens or the tokens that the user of this notebook is interested in. Then if we jump into the following, here also we plot some distribution analysis, really high level. Here we're going to basically display what is the TVL distribution across different liquidity pool size. We're going to also see the distribution over the last 24 hours in terms of volumes. As you can see, basically, the liquidity in terms of volumes and TVL is mostly concentrated in just a bunch of calls, as one would expect. And there is also a report with regards to the APY distribution. And with that, it comes as well a quick summary of the main findings of these snippets. The third part is going to be about basically tracking the liquidity provision movement patterns. And the goal here is to try to understand if there are big migration in terms of TVL across main liquidity pools. And it can be very interesting to understand this dynamic because from one side, the big growth in TVL may basically be a signal of increasing returns in terms of liquidity provision, but also can be a warning sign if TVL gets depleted very quickly, that the pool may not be as attractive as it used to be. And this snippet as well produces some charts explaining, in this example, Trump token versus USDC, this pool in terms of Sol USDC, and another I APY Monosol in terms of TVL development over the last set of days. Here I've been setting it to 90 days, but this can be configured to a different time window that may suit the user. This part is about swap analysis, and here is about finding the optimal tool for your trade size. And the output of this snippet is going to show what are basically the best pulls given a certain size. And also is going to show as well what would be the impact in terms of slippage trading across these specific liquidity pools. Again, in the next cell, we dive a bit deeper again in TVL migration analysis, and here is about fees. So here we try to answer the question, are these APY sustainable and how have they been evolving over time? As we can see quickly in the outputs, probably the chart is the best way. It's going to show, in this case, for two USDC pools with different bin size, what has been the fee history over a certain time window. On the right-hand side, it shows the fee distribution, the box plot, how the dynamic liquidity provision has worked in terms of fees. And this is one important aspect to capture because the dynamic liquidity provision of Meteora, different from, for example, from Radium or from Uniswap you may be used to. Basically here, the fees are dynamic and they depend on the volatility of the underlying asset. So it's interesting to see as well how the fees have changed in the recent past and what has been their distribution in different volatility regimes. And again, we plot different APY scenarios and also the volatility of the fee, as we can see in the last few days, as the volatility in the market has picked up as well. The volatility of the fees has followed suit. This is probably the most interesting part. Now we jump in, and here we analyze the liquidity bins. Here we use more the gateway framework to get this data, which is not easily available directly through public endpoints. But gateway gives a deep dive, a good and granular analysis of the liquidity provided across different bins of price ranges, if you like. This is an example how the chart will look like. For example, for Sol USDC, for a certain bin size, and while the yellow dotted line shows what is the current price, on the left-hand side, on the right-hand side, you can see what is the current liquidity provision size in dollars per each, basically liquidity bin, which can be interesting if you want to find an optimal range where to place liquidity. Like, for example, in this example, we can see the liquidity is highly concentrated around the current price, but you can find basically other area of price where basically you can optimize potentially your collection of fees. Let's then maybe go quickly over this and let's take a closer look basically at the core engine of this notebook. And basically I believe this is the main added value of this notebook. So first of all, as said, we're going to plot a heat map of what is the liquidity distribution using gateway data for the top 10 tokens. You can fine tune these, you can change to different pairs to create this heat map. This is going to help you to see where currently liquidity is sitting and where basically market makers are mostly active. And then coming to the final point of our research is more the liquidity manipulation detection framework. Here, Notebook uses 10 statistical metrics that help identify manipulation risk or certain imbalances that may exist in the pool of Meteora. And these are the Shannon entropy, where basically we try to understand the disorder present in the liquidity pool, the Gini coefficient, which is going to be an indication of high or low concentration or liquidity provision in the pool. Then the third element is the Herfindahl-Hirschman index, where we analyze the market power concentration. We have a moment analysis to understand how order or natural, if you like, the liquidity pool distribution is, and how can be actually too perfect, meaning that probably there is high coordination across potential liquidity providers, can be a warning sign, basically, of risks for the strategy. Then we're by modality coefficient. Here we try to understand if we're two-sided wall detection of price. We analyze as well the autocorrelation, so the spatial periodicity patterns, to see if there are many bots that are managing liquidity in the specific pool, or if it is more, if we like, also manual work behind it, and if there are many uncoordinated or coordinated market makers present in this pool. The clustering analysis is going to provide an idea if there is a pocket concentration of liquidity. And then last but not least, the last three statistics that we use is the permutation entropy, which is analyzing the ordinal patterns present in the pool. We have the Welch spectral analysis and the Jensen-Shannon diversion for baseline comparison. Then we put together these indicators to basically provide a report across the main pools analyzed to understand if it is more of a random, natural, if you like, pool, if there are more two-sided walls, or if there are many bots present, or where there is a clear whale dominance. And across the top 10 pools of Meteora, we see that there is definitely a lot of whale dominance in certain parts, and there are many bots active, if you like. But the main goal basically is to provide more of a report across the main pools and give kind of a deep dive into the microstructure of the different pools. It may help you basically then from here optimize your liquidity provision strategy. At the end, we have the Telegram notification. This is something similar already built in QuantSlab, but can be very helpful to have this report automatized and sent regularly. In this case, we set up an hour on Telegram to have kind of a warning and the report at hand to then trade from there. Hope you enjoyed this presentation, and if you want more data about it, I also presented and added some slides explaining more in detail the statistics and the methods used by this microstructure analysis notebook. Hope you enjoy, and please feel free to take a look at the code and take a look at the basically presentation that is accompanying this notebook. Thank you.
Cool. No, yeah, thanks, Max. That was great, actually. Really, yeah, you went a bit long, but I really appreciated the in-depth usage of both Gateway as well as the direct Meteor API. Actually, you're using it the way that I intended it to be used, which is just using Meteor API directly alongside QuantSlab to conduct like high-level analysis and detect pools, and then using Gateway for data that's not available in the public API, like the bin data. Well, and I think that's actually why I think the Meteora is a good one to use, because Meteora, I think, has more detailed data in both the API as well as in their SDK than Radium and other ones do. I think because of like we share like different types of distributions in Meteora, there probably are, I suspect, more opportunities to profit as a liquidity provider.
Yeah, congratulations. I also reviewed the notebooks and I really like them. I think that you mentioned something that would be good to automate the report. You can do it, that stuff, if you need help with that. I don't know if you said that you already did it or not, but if you want to schedule it, see that inside the conf folder, you have some YAMLs as the one that we did in the last week, and you can put a frequency of when do you want to execute that notebook. So basically, we'll get that notebook as if it's Python code and execute it with a frequency that you want. So that's something that you can do now. You only need to build the QuantSlab image locally, and it will work. I think that in this cohort, we discovered this new... okay, perfect. You want to write on cloud. Yeah, then you need to write it on the cloud to have it like forever running. But I think this new cohort, we find there is a very good like synergies between using QuantSlab and Gateway, even for monitoring or for doing research. Great work there, Max. Very happy that you were able to accomplish what you want. Congratulations.
I'm going to play from here. I think this should be the actual video. So I think this is Pasha's video. So now Pasha's strategy is, I think this is actually really cool because I think he took the basic funding rate arbitrage script and he extended it to make it more generalized and to accommodate multiple exchanges. Let's take a look.
Before we start, I must say my English is not very good. I prepared the script and will read it. Actually, try to read it. Sorry if it's not very nice to listen to. My name is Pasha. This is funding rate arbitrage strategy. The controller looks for difference in funding, and the executor opens with limit orders and hedges with market orders. The goal is to earn from funding difference and stay market neutral. The strategy can run on many exchanges at the same time, but sadly for now, I only tested it with Bybit and Hyperliquid. We open in parts to reduce slippage. The process is simple: open, monitor, and close. We use caps per pair and total budget. Status shows what happened. Funding rates are not the same on different exchanges. This happens because of liquidity and trader positions. We long on the cheaper side and short on the more expensive side. Maker entries gives better price, and if the funding spread goes down, we exit. This diagram shows how the controller works. It checks pairs, normalizes funding per second, and decides if the spread is above the threshold. If yes, it creates an executor with needed size and settings. I also added a new field called funding interval to the standard Hummingbot funding info class. This was needed because Bybit has both 1 hour and 8 hour pairs. Without this field, the script that collects funding rates calculates Bybit funding incorrectly, because it assumes all pairs use the same interval. This diagram shows the executor flow. First, it opens step by step with limit orders. Each field triggers a hedge with market order if the size is big enough. If the spread stays low for some time, it closes. Limit closes mirror the opens, and the rest is hedged out. Right now, I cannot explain the full logic in detail. If someone is interested, you can find this diagram inside the strategy template. For now, I can only show how many lines of code I had to write to make this logic work. Let's see it. The executor is almost 1000 lines, and controller is almost 600 lines. Let's back to config. I will explain it. This is my main config. The total budget is $400. This means the bot will not spend more than $400 of notional across all trades. I use two coins, XPL and Sol. XPL with cap of $100. This means that for XPL the bot will not open position larger than $100 total. And the cap for Solana is $300. Each trade is split into smaller parts. For Solana, each part is between $50 and $150. This way the bot does not open everything at once, but step by step. For Signal, the bot only starts if the funding spread is at least 0.01% over 24 hours. Maker orders use 0.4 basis points offset here, and they leave for 15 seconds if they not get filled. And hedge orders must be at least $5. If this funding spread stays below 0.01% for 60 seconds, the bot starts closing position gradually. For now, let's run the strategy. I will show it how it works. Let's open Hyperliquid and Bybit. Yeah. So we can see the executors starting to create orders. Some of them get filled. Yeah. We can see it now. Laggy interface on Hyperliquid, as always. We can see two position and two open orders. One open orders for now. It was closed by TTL. It should open. Oh no, it shouldn't open more. As you can remember, for XPL we have $100 cap, and for Solana $300 cap. So for in Hyperliquid it opens 1 and 4 Sol and 60 for XPL. On Bybit it should do the same. Yeah. Here the boss coin is long. Here the boss is short because of funding difference. In this demo, we will not see a full close because funding will not drop under the threshold right now. The threshold is shown here, and we can see the funding difference for Sol and XPL here. For Solana, it's 0.029%, what is higher than threshold, and for XPL, it's 0.18%. That is actually too high. Yeah. For now, we can close it manually by initialize stop command. It will just close all position by market. Yeah, laggy interface one more time. Yeah, here and here. Let's get back to demonstration. Current limitations. The build is still debug, status is not fully correct, logs are very verbose, and some words like entry spread check are not ready. Failure recovery is also simple for now. Next steps are adding entry spread checks, order depth check, adaptive threshold, and a better status view. Also portfolio level allocation. The strategy already runs the full cycle: open, monitor, close. It is simple to follow and repeat. This is a prototype. Next I will add the missing parts and make it ready for production. Thank you all. Bye bye. Hello everyone.
Cool. Great job, Pasha. I think what you did here is this is like a more kind of strategy that I think a lot of folks in the community have been asking us to build, which is extending that simple fundamental arbitrage script into this kind of like a full-fledged executor and controller that can handle like multiple exchanges, differences in funding rate, like with the duration, like what you did, and so forth. I just think that this kind of strategy, if you wanted to submit as a pull request into the open source code base, we would probably review it and and accept it probably, because I do think it's something the community would also want to use as well. But Fede, do you want to add anything before? I think Max has the question as well.
Yeah, no, I was going to say that this is a very good improvement, like to improve like the order execution. Congratulations, Pasha. And also it's not simple what you have been doing, so great work there too. And if you need anything from my side to help you with that, let me.
Yeah. Last question, just said more general about collateral management. Does it not get complicated with the strategies? So yeah, Pasha, feel free to chime in. But anything with like arbitrage, where you're basically doing two exchanges, there's always collateral management issues because of the need to rebalance and the cost of rebalancing. So that's why ideally a lot of these strategies, you want to try to kind of like lean your inventory one way or the other to try to like not have to rebalance. Yeah. Okay. So we're running a bit late, but I think we have two more strategies to go. So I want to make sure we just give proper time to these two students. So the next one is Todd has a strategy which combines TradingView and Hummingbot, and it's the full-fledged system that Todd has created here. But yeah, let me play Todd's strategy. This one's a bit long, so I'm going to play it on 1.25 times speed. But because Todd spent a lot of time building the system, I want to give him some space to demo what he built. All right, so let's go ahead and check out Todd's system, not just strategy, and the whole system.
Hi there, my name is Todd Griggs, and I would like to show you the strategy that I've got working between TradingView webhooks, and the Hummingbot framework. Let's go ahead and just start off with what our overall goals are, what our hypothesis is, and the description, and then we'll dive right into the flow and show you some actual trading examples. This is a fully implemented trading system that's been up and running for a few days. I have had a few edge cases that have come up and had to fix over the last few days, but we're up and running. What our overall goal is to have a trading system that enables both decentralized and centralized exchange execution of trades on initially we're working on Uniswap and pretty much all of the level 2 Ethereum networks that they support. And then also Solana with Radium, Jupiter, and also Meteora. And I'm really excited to learn how to trade more on the Jupiter network because it provides a lot of additional tokens that we may not have been able to access. That's very exciting. And really what I'm doing is using Hummingbot as a the Hummingbot gateway as a way to execute trades on either a decentralized or centralized exchange. And that's actually working really well. We're using the Gateway 2.9 framework that's been recently updated using the JSON files rather than the YAML files, which has been very helpful. We have a MQTT broker, which translates the information from TradingView into signals that the Hummingbot can read. And then ultimately, we're, like I say, just pretty straightforward in terms of the concept of executing. The details are extensive between the different decentralized exchanges, and that's one reason for the complexity and the difficulty in actually getting this strategy up and going. So I'm really happy to see this up and going. I've been able to reliably have signals run 24/7 for several days now. We'll get right into this. There's 3 different levels that we're working with. There's the TradingView level, which I'll just show some examples of what I'm doing in production. Then there's the Webhook bridge server, which is purely Python. And then I want to spend some time on the Hummingbot execution piece. And we've got that running live. And I'll also execute some simulated trades with live Webhook examples. And then we can do we can show the code. It's up there on GitHub with the link. But I wanted to make sure that we covered these high level areas, the alert system, the bridge server, and then the execution engine. At a TradingView level, let's pull up an example of what happened actually today with Bitcoin. We had a really nice move up. We had a signal within the trading system that I use in TradingView, and we had a buy signal and a sell signal. And so what I do is that straightforward, have a signal that is generated using their Webhook system and alerts, and then a sell system also in the alerts. And over here on the right, you'll see I have 4 different token pairs that I'm working with right now. Coinbase, AVAX versus USDC. On Solana, I've got Radium versus USDC. And on Uniswap, the Arbitrum network, I have Wrap Bitcoin versus USDC and Ethereum versus USDC. And these are live trades. These are live production, what I consider anyway, in just production testing. Let's take just a quick look at one of these. The idea is that we can easily create these trading pairs. This is a critical issue in the code for TradingView, and that'll be for another day, but I just want to briefly explain where all of these initial signals come from within TradingView. And then we have the webhook URL. What essentially we do in TradingView is create a text file. It's in the JSON format. It's very straightforward. It's identified right up there in the TradingView, the flow document that I have. The text file is created and sent to a webhook server, and then it tunnels to the local computer. And it's actually proven to be quite robust. I've been very pleased with how this is working. Again, I want to move there's quite a lot about the TradingView system, how it works and so forth, but the takeaway from this is that there's a JSON formatted file. It's essentially a text file that gets sent over to the local computer, and then we process that signal in Hummingbot. So let's pull up the hub repository and graphically look and see what I'm talking about here. So we just saw the buy and sell signals in TradingView. You've got to set that up as an alert. And then this is that file. It's just really straightforward, a text file, but it's got to be properly formatted with what you want to do with the Hummingbot framework. So in this case, as an example, we have a buy. We're buying Bitcoin USDC. We're buying our Uniswap, Arbitrum, and then we're using a concentrated liquidity pool. So this is all codified. It's configurable in the TradingView system. It's fine script code, and that is written. And what you do is it ends up sending it to the webhook server. It validates it whether it follows the guidelines that we've set here or not. And I also have I've created an API key for trading so that it's very difficult just to send a bunch of buy and sell signals. You've got to actually pass through an API key, and that's self-generated. If it's validated, then it gets sent down to the Webhook bridge server. This is just a Python web server that has valid keys that we check against in order to transfer that over to the Hummingbot framework. Take a look at this just real quickly. I'm not going to spend too much time on the bridge server process because I want to actually get right into the signal generation and piece the portions of the code that we have there and actually see some live trades because it is up and running. I'm leaving it up and running 24/7. So I'm very excited about that. So then we go through a decision, whether it's in this case, I have Coinbase that we're using with the Coinbase controller, and then I'm using Gateway 2.9 with the latest JSON file configuration. If it's a DEX trade, if it's a Solana on Radium or Meteora or Jupiter, we go down this path. If it's on Coinbase, we go down this path, and then we execute and then move on. We go back and look for another signal. What I like about this is it's very RPC light. It only invokes the volume that you see on your RPC end nodes when there's a trade or when you're looking for just some basic pricing. So it's very light on RPC. Some of the other techniques that I've looked at have been very heavy on the RPC, on the nodes, and you exceed your volume that you're allowed and so forth. This is very light because TradingView takes care of all of that. You're really just looking at those signals that they've already addressed. So with that, let me make sure that we've covered most of the high-level details. I want to get into some examples with this short time frame that we have here to go through, and then just get right into some examples. So let's get into some examples here. Actually, these are more than examples. These are live trades that we have. So if you type in the status in here, we've got just a few because I've gone back and forth between starting it up and ending it. We've only got 4. The total today, I've done dozens and dozens of trades. I stopped and started it. I did find an issue and I was able to resolve it, get it up and going again with Jupiter. And it's one of the edge cases. Of course, they keep coming up, but that's what we're here to address. What we have here, these are live transactions. These are transaction hashes that if you look out on either Arbitrum or Solana, you'll be able to trace. And as part of the coding, I also pull the actual hash. I go out and look for the actual hash on the blockchain to pull that back and validate that the trade actually did happen. So let's go through here and do a couple things. Let's go through here and buy some. First of all, let's take a look at what our wallet has to show here. And let's see. There we are. All right. Here we go. Our current, let's see, I don't think we're in any current trades. I think we cleared up all of those. Let's make sure. Yep, we don't have any Bitcoin, which is fine. So let's go through here and actually create a trade. And this is exactly the same thing that we would see through the gateway. So we can initiate this. This was an important part of the development, was to be able to cycle through examples of real trades as they go through into the Hummingbot framework. Now let's actually create a trade and see it actually execute on. Now this would be executing on the Uniswap DEX on Arbitrum, and it's using their concentrated liquidity pool. Let's go through here and click that. And we have a buy here, roughly $10, and we have a successful trade that happened very quickly. Uniswap has been very reliable. On the Arbiscan, you can see the actual hash. There it is right there. I coded that. That is coded so that it actually goes out and pulls it in, so you don't have to go out and check. It's actually verified and pulled from the blockchain. And then now let's go through and make sure that we actually see that in our wallets. Let's go through here. Go. There it is right there. There's the Bitcoin right there. We've got roughly $10. So we're successful. That was a successful buy. Now let's go through and do a successful sell of Bitcoin just to demonstrate the ability to buy and sell on Uniswap. We'll go through here, sell, integrate. We are pulling the gateway sell. It was successful. There it is. It's on the blockchain. It's validated on Arbiscan, and it shows up in our status. There we go. And we've got all of the different trades that we've made since we started. There's only 6. I've invested in dozens today as we've tested. Now let's go back and check our wallets and make sure, okay, we had Bitcoin. Now let's refresh. And now we do not have Bitcoin. Yep, there we did. We sold it. So there we have a buy and a sell. It's validated on the blockchain. All right. So now let's demonstrate the same thing where we are buying on Jupiter. Jupiter is an aggregator, a DEX aggregator. And this will buy SOL on Jupiter. Let's actually, before we do that, let's go and look at our Solana wallet. We currently we have $4. We need to maintain a minimum of some amount of Solana in order to handle gas fees. We have a minimum amount of that, and I've coded that into the strategy also to leave a minimum. Solana is a little different. You've got to leave some in there. When I buy 100%, and I buy a certain amount and then I sell 100%. But with Solana, you have to make sure that you leave some in there. So there's some added code in there to leave enough SOL in order to pay for gas. So let's go through and execute a buy on. And again, this is a real simulation of a buy signal from TradingView that ultimately ends up with a real trade. And that has been a key part of getting through a lot of the trial and error of getting this working reliably. So, all right, so we're buying Sol on with Jupiter, and you can see up here in the upper right-hand corner, this is gateway, by the way. Upper left is over here is the bridge. This is ensuring that the signals come through are correct. Then over here in the lower right is the webhook strategy, and then up in the upper right-hand corner is the gateway information, the log file. So that's happening. What gateway is telling us that it's doing. It's telling us that it's executed the swap. The transaction hash is here. We've calculated, see that I pull the actual blockchain soul scan information right into the strategy so you can see it and have confidence that it actually happened. And let's now go into let's pull up our wallet, make sure that we've actually purchased Sol. We started with 14, we started with 4 and we ended up with 14. And then the idea is that we would then turn around and sell the Sol, but we need to make sure that we leave a certain amount. And I've had that as an environment variable so that you always have enough Sol left when you sell your position. So now let's sell our Sol here, and we're going to use Jupiter. We're going to sell that. And you can see we're up in the upper right-hand corner. We have the gateway tell us what it's doing. Upper left-hand corner, we have the signal. This is the middle part of what's telling. We have what Hummingbot is telling us, and we have the actual Soul Scan Explorer that's telling us what the transaction that was successful. And now we have an update on our status. Let's see. We have 8 trades in this since I started the strategy, and it's telling us what all the positions are and what the success rate is and so forth that we work through. So that is a demonstration. We have those are 2 different networks. We have Uniswap, we have Solana. We can also do let's see if we've got a Coinbase. Do I have a Coinbase purchase here? Let's see if we have something that we can do real quick. Let me pull something up here real quick. See if we can do doing some testing with Coinbase to make sure it's working. Let's do a purchase of AVAX on Coinbase. Let's do this here. All right. So if we go to Coinbase and we see what our current balance is. So right now we don't have any balance on Avalanche. So let's get a balance. Let's buy some wrapped AVAX. All right. So up in the upper right corner, you see the transaction happening. We actually bought the webhook updated, the controller within Hummingbot updated, and we're going to wait just a minute. It takes a little bit longer with the Solana and Uniswap. We can pretty reliably turn that around and sell. All right, we have roughly $10 in Avalanche. Now we just got a live signal here. There we go. All right. Oh, that was the AVAX here. Okay. All right. Let's see what we end up with. And here we go. Yeah, we have $10 in AVAX. Let's make sure you can see that. There it is right there. All right. And then now let's close that. All right, there we go. And now let's sell. There we go. Now we can sell. We're selling. All right, we've sold. Successful. And we had roughly $10. Now let's see what we end up with here. There we go. We sold it. There it is. Excellent. All right, so in just a few minutes, I demonstrated trades on Uniswap, Uniswap on the Arbitrum network, Solana using Jupiter, and then Coinbase, all routed through the technique that we were showing earlier. And that's this process. We've been through this several times, multi-dex, Solana, Uniswap on level 2, and then with Arbitrum, and then Coinbase. That is the culmination of the code that I've written. And take a look at this real quick. Up at the top, I pull in a bunch of environment variables. I used environment variables rather than the configuration method. That's just the configuration files. That's just the way it worked. And then you'll see there's initializing the markets, the on-tick methods, and then I'm also capturing some performance metrics around when we buy, when we sell, how many we're selling, and so forth. Initialize the strategy, go through and refresh the gateway. You'll see reading the configuration files, pool information. This was a big change with 2.9 using JSON files versus YAML files. There was a lot of work in moving from that prior framework. I do a lot of I do a lot with validating the trade signal, ensuring that we're properly configured with the signals from TradingView. There's a check if it's decentralized or centralized, if it's got a pool configuration, make sure it has a valid symbol. There's a lot of checks that we go through, and then I pull in the information from the MQTT webhook server, I connect, and there's disconnect code, validating the signal, initializing the connectors, and then ensuring that the connector is ready. I'm not going to go into all the details. I also do some testing to ensure that it is ready or not. Connect with the order books. If I am going to go down the path of the centralized exchange, which one am I using? I'm currently working with Coinbase. Ensure that we're working with the supported networks, of course. There's the summary information you saw with the status commands, and then I'm not going to go into all the details here. You can pull it up and look through it, but processing the signal, the buy and sell signal, I separate out whether it's a EVM or a Solana trade, and then also take into consideration the fact that I need to leave with the Solana trades. I need to leave in a certain amount of SOL in order to pay for gas. But the code is updated on GitHub, and also the information that you're seeing here, and the flowchart as best I can, the way to get this up and running for yourself. And hopefully this will inspire people and help people on getting information from TradingView into Hummingbot. Hummingbot's been a great framework to work with, and I've enjoyed working with everybody, the whole team, and very smart, good people to get this up and running. I appreciate it. So take care, everybody, and we will see you soon.
Thanks. Thank you very much, Todd. I really appreciate all the work that you put into your system. I can see from the code that you wrote that you must handle a lot of different issues and edge cases and using Gateway in particular. So yeah, just great job in just basically building a production level system using our framework.
Yeah, same. Congratulations, Todd. I think that you took the path of building more like infrastructure for trading. And that's like really cool, because now it's like what you build, you can put into it any signal that you generate through TradingView. So congratulations on that. I hope that you can. And the good thing is that you were executing a lot of trades, as you mentioned. So that's also very cool.
Yeah. And I think once we have the profile set, I'm really glad that we're doing the profiles now, because I think it'll give us a chance to highlight what you built and allow more people in the community to take advantage of what you built if you want to have the code out there, and so people can extend your system and build on top of it. All right, last but not least, let's see Troy's strategy, which he applied a name called Shufflemania to. Yeah, let's take a look at this one, which is a really innovative kind of like way to kind of like allocate liquidity in bits. Actually, I'll you pull it up using the Notion page as well.
Hello everyone. This is my presentation for Hummingbot Botcamp Cohort 12 demo day. My strategy is called Shufflemania. It's a cross-exchange market making strategy on Texas. So the general idea behind the strategy is that we're going to continuously reposition our LPs to chase fees, and at the same time we'll be looking for arbitrage opportunities whenever we need to reposition. An important observation about one-sided liquidity positions on CLMMs is that they effectively act as limit orders. For example, take a SOL-USDC CLMM. If we put a one-sided liquidity position with only USDC in it, if the price crosses down below our position now contains only SOL in it. So effectively, it becomes quote-unquote filled. The next important observation is that one-sided LPs on the same side of the price are effectively all the same, in the sense that they all contain the same token within them. So, if we have an LP that was quote-unquote filled, and we have other LPs on the same side of the price, we can treat them basically all as if they were the filled limit order. Here's a basic strategy that takes advantage of these observations. It maintains a number of consecutive LPs and keeps rebalancing them to make sure that the price stays within range. Every time we rebalance, we remove liquidity from one of the edge LPs, swap the tokens, and add liquidity on the other side of our range. The idea here is that when we need to swap, price differences between venues might have arbitrage opportunities. This is different from regular arbitrage in that one leg of our trade was filled with a limit order, which doesn't incur any taker fees. A cross-exchange version of the strategy runs the basic reshuffling strategy on multiple dexes with the same trading pair. If there's a large enough price difference between pools, one of these strategies will have an arbitrage opportunity. I have a simple implementation of this strategy that runs with just one DEX. In this case, it's Sol USDC on Radium. Each LP is opened at $1 increments, and each LP has roughly $1 worth of tokens in them. And the total price range is $10. So we should have 10 LPs. Every 5 seconds, it updates the price, and if the price enters the LP on the edge, it will shift the target LP price range by $1. So if we run status, we can see that the current target price range is from 204 to 214, and the current price is 212. And it lists our LPs, and there should be 10 of them at the moment. You can also see these LPs on Radium. There are more LPs here than what we saw in status, and the reason is the strategy doesn't actually close LPs, just leaves dust amount in them. This is because adding and removing liquidity is a lot cheaper than closing and opening LPs, so we use the LPs. Well, that's it for my presentation. And as a final note, I'd like to thank Fede and Mike for this amazing opportunity to learn and the amazing project they're maintaining. Thank you.
Thank you, Jared. Thank you, Jared. That really means a lot to me and Fede about the work. But and I'm really glad that you were able to use the new gateway. I know there's issues in closing positions. I would actually recommend that you close these positions because there's a rent you incur by maintaining each of them open. So you probably do want to. You're probably right that I think keeping them open is probably more efficient, but it's probably a limit in terms of like how many you want to keep open versus closing them to reduce the amount of SOL you're spending on rent.
Yeah, so for my basic simple implementation, my buckets are $1 in terms of width, so I don't actually have too many of them. So I'm like, okay, I'll just keep them open.
Okay. But I do think I actually like this strategy a lot, especially I think for what I call meme coins, where it can go up and down like really a lot. So you want to like have a lot of buffer on each side, but you don't want to like maintain. You don't want to rebalance too much. So I actually like this a lot. I think especially for, let's say, some meme coin moves a lot, like maybe a Pengu, for example, where it can go up, or Pump. Pump would be a good one, where it goes up a lot, like 10% or minus 10% in a day. So I think this is our last presentation. So let's move on and move on to the voting part of the presentation. That is basically voting for the MVP. So basically, the way this works is that there is this poll that you guys can. So basically, you can go to this link here. I'll put this link in the chat, and then I also will open it myself, and this will basically be what I use to do the voting. So I'll do this over here. Present. Okay. Yeah. So you guys should see this MVP voting screen over here. Let me actually do this. I'll also do it myself on my phone. So basically, everyone on the call is going to vote, and we're basically going to go and we get set up here. Okay. So let me make sure I can go to the link myself. This link actually doesn't seem to work. Okay. Yeah. Just go to the link in the chat. I'll go to the link. I don't know why this image seems to be not correct, actually. 1 second. Okay. But yeah. I think you just go to the link in the chat, which should work. And then you'll see is that basically, we're going to vote for your favorite strategy. And then you can basically vote. You can basically rank the strategies here. So I think you should be able to rank it if you guys can go to it right now. I try to usually do my phone, which is something here. But yeah, so basically, I think if you go to that link right now, you should be able to vote. And then afterwards, I'll link your strategies. So I'll give everyone about 2 minutes to think about the voting, look at strategies. You can also access the strategies in the strategies designs database if you want and vote there. Meanwhile, I'll play some music, and then let's see, we'll do some YouTube Jeopardy music. And then we'll basically play, I'll give everyone Let's see. Let's two about 1 minute. 1 minute to finish all of the rankings. Okay, so with 2 playthroughs of this theme. Probably 1 more minute. I also need some time myself. Okay, and then one more. So 30 more seconds. Yeah, try to finish next 30 seconds and we'll wrap it up. But yeah, let me know. Actually, it looks like only 16 people voted. So yeah, 11. So far, it looks like we have 2 or 3 more. Actually, I'll probably play a more run through just to make sure that everyone. Yeah. Does anyone need more time? Looks like there's 3 more. I saw the Jeopardy music. Looks like there's 3 more people who haven't voted. Actually, I should actually play this. This is probably better. So yeah, this is the current view count right now. We do have 3 more. I don't know if people are still voting or not, but basically, yeah. Let's give everyone a few more seconds in case it changes. But I think that from the results, I think we already can probably appoint the MVP already. It looks like Todd's strategy is the overwhelming selection for MVP, and I think it's well deserved. I think that the amount of the work that Todd put in, and I think the amount of usage that people can use it for, I think it definitely makes it a well deserved MVP. So congratulations, Todd, on winning the MVP for Cohort 12. Yeah, but honestly, I think there are actually many deserving candidates this cohort. The reason everyone certified is I was actually super impressed with just like the amount of effort that everyone put into their strategies, from Joris building his own Camino connector to like Pasha, like really extending the funding arbitrage strategy. So yeah, overall, just great job, everyone, in terms of what you guys built. So yeah, this wraps up cohort 12. But hopefully, this is just the start of your participation in the community. You have lifetime access to the channels on Discord as well as the courses. And what we're going to try to get the profile section updated. We'll send out an email, hopefully by the end of this week, with the NFTs, the videos, and also more information how you can update your profiles. But I really appreciate all the work you guys put in, and the fact that I think you all have learned, hopefully not from us, but from each other, means that you can share the code you're using, try to explore what each other built, and basically try to help each other become better market makers and algo traders. Yeah, so Fede and I, we're gonna really concentrate on building up the Hummingbot framework, making it better, and we're gonna be doing the next cohort of Botcamp in probably April of next year. And we do encourage people to take more Botcamp, so we're gonna try to give you guys a big discount if you want to take it again, and we'll have more information hopefully in the next couple weeks. Yeah, overall, yeah, I really enjoyed teaching you guys, and I had an amazing time this cohort, and I hope everyone here learned a lot. And I'll see you guys in Discord. I'll get this video posted, and thanks everyone for doing this.
Thank you. I know you guys put in a lot of work to make this happen. You guys did, Mike, and I appreciate it.
Thank you guys. Lovely. Really must. Great course.
Thank you very much. It was really good for us also to have you. We also learned from you. We put a lot of effort with Mike because it's like this month is like every day having calls and preparing for the sessions and everything, but we really enjoy it. And also we try to also learn what you want to do so we can improve the framework towards what you also want. So thank you very much.
Yeah. It's not just us, it's also the team, Carlito, David, Nikita, Ralph. Basically, there's also a team behind us that's helping us do everything that we need to do and supporting you guys. But yeah, I think that the fact that everyone learns from each other, I think that's why we want to try to replicate this experience every 2 times a year and try to just share as much as possible and try to see this. Yeah, I'm getting emotional, but I really appreciate everything that you guys learned and all the effort that you guys put into your strategies. Yeah, we'll do our part and try to create a really designed profiles page and try to keep the conversation going in Discord. So yeah, I encourage you just to be part of the community and join us in democratizing trading. Oh, one final thing. If anyone is planning to go to DevConnect in Buenos Aires this year, Fede and I will be there. If you are, just feel free to ping us. And we're going to be doing around the conference, and I think it's in mid-November, and we'll be there, should be there most of that DevConnect week in Buenos Aires. So if you're there or elsewhere, and I think we'll try to do more events in the US as well next year. But if you're here, we'll try to love to meet in person. So thanks everyone, and we'll see you on Discord.
Bye bye.